How's it going, you guys? My name is William and welcome back to my YouTube channel. Today's video I'm going to be talking about my stocks, my average cost for each stock, and I can also talk about my dividends and what sort of income I've received from dividends. I know a lot of people like blue chip stocks. They think that they're amazing and they're the best and they're the only option. And in the past I was kind of in that mindset, but now I'm currently just trying to build my investment profile or portfolio so that I can run the wheel strategy on my stocks that I do own. But for now, blue chip stocks, they're earning me dividends while also potentially going up in value. So I really like blue chip stocks, but they're not my only sort of investment that I want to do in the future. It's just the only one that I'm able to do for now. So basically, I have about $7,000. If you look at my all-time chart, I have I started about $7,000.55 of my own actual cash that I put into Robinhood. And Robinhood is my only broker. I don't have any other brokerage account. Kind of just stuck with Robinhood because it's easier than making a new account, learning that brokerage and whatnot. Despite all of the stories that we've heard recently in the past couple months about Robinhood. But I do still think Robinhood's a good platform. Their accessibility to use their site is very easy. The layout of their site is very easy and it makes sense. And I also love their mobile app. Their mobile app makes a lot of sense to me too. And each desktop and mobile app, they have their own benefits over each other. So today is March 24th, 2021. Stock market is closed for the day. It is currently 5:30 p.m. Stock market closed about 4 hours ago for me. Let's see. Today's return, not looking so hot. Lost a lot of money at Apple, AbbVie, and let's say AMD. Those are like my biggest hitters. But for my total return, you can see that while yes, a lot of them were red today, almost all of my stocks that I have are green in a total return. And that's how I have a plus $462 return on my money, or 6.5%. For the past 3 months, so starting in December, I'm up about $53, which isn't a whole lot, but it's a decent amount. Past month, about $13. It's not the best either. In the past week has not been good for not only me, but a lot of people in the stock market. And obviously today was pretty red, negative $44. So anyways, I have about $77 my own cash into AT&T, or roughly about how many shares? 36 shares, and an average cost of $29.50. AT&T is a blue chip stock. They are known for their dividends, and they pay pretty good in dividends. Back in February, when I didn't even have that many, I had about 5 shares. Gave me $2 just off of 5 dividends, almost $3. That's pretty good. And I bought them back in August, and I never bought any more. And each time you can see they paid me 5 cents more, which is pretty good. So I can already see the compounding interest effect just with the AT&T. Let's see, my next stock I have is Realty Income. I have about 10 shares or so with an average cost of $61.65. Total return of $20.28. And obviously you can see today was a pretty good return. They are also a blue chip stock. They pay some dividends. Let's see, my last dividend was only 24 cents. So Realty Income, they don't pay me a lot in dividends, but I can see them as a growth stock. In the past, 5 years they have grown, or even the past year they have grown quite a bit. So that's kind of why I bought them. I have about 11 shares of Hormel, average cost of $47.99. So not the best total return so far. It's pretty close to the current market price for them. They pay a pretty high dividend rate as well. 49 cents for only 2 shares. That's not bad. Obviously, not as good as AT&T. I have Apple. My Apple position has gone down. Average cost of 126 with 5 shares and negative $30. I haven't bought them very much, but as you can see, I did have them. I had them a long time ago and I sold them. And then just recently, back in February, I started to get into them. I bought at 131, and then I've been trying to average down my price so that my total return isn't that much, and I'll be able to ride the green train once Apple hopefully goes back up, because that's what Apple is known for, and they pay a dividend. Same with Microsoft. I bought Microsoft is a little bit more pricey though. I have about 2 shares. Total return of negative 468. So I bought one. Where is it? I bought one back in February of 16th, and about a week and a half later, I bought, or no, probably a month later. Yes, a month later, I bought another share. And I was trying to lower my average. So my average cost is $237. Market price went down today, so I am down a little bit on my Microsoft position. More, it's a ETF mortgage REIT. I have about 27 shares, and they also pay dividends. Almost all of my stocks pay dividends. The only stock that doesn't pay a dividend that I do own is AMD, and we'll talk about AMD in a little bit. But back in January, when I only had 6 shares, I got paid $2, which is pretty good considering the price of this ETF. It's only about $18, but my average cost is $17. So the price of the ETF and the dividend that they pay, which should show somewhere at 9.3, that's a pretty good dividend for how cheap the ETF is. I have some CVS. My average cost is $69.08. I have about 11 shares. I bought it a long time ago when I first started to buy stocks. If you saw my last video, I said I had about $1,000 in stocks, and CVS was the first stock that I did buy back in June. I bought 1 share, and then I bought another share, I guess the same day. I don't know why. And then in July, and then I didn't really buy any more after July. And then I started to really ramp up what I'm putting into my investment portfolio starting this month and a little bit of last month. So I bought 11 shares and then $45 total return, which is pretty good on CVS. And they do obviously pay dividends, so that helps my total return as well. I have Aflac. I have about 11 shares. My total return is about negative $3, which isn't that bad. I also haven't owned them for that long, only since about February, so I haven't gotten any dividend from them or anything like that. And I have some AbbVie. I don't really quite know what AbbVie is. I know they're kind of like a pharmacy, like, I don't know, like some sort of pharmaceutical production company. So I probably should do my due diligence and do more research on these stocks, and that's one thing that I would suggest is if you plan on investing in stocks, really try to research stocks or just try to get to know the company themselves. Are they a good company? What do they do? What do they support? What do they not support? What kind of just company is it in general? You don't want to buy a weed company and hate weed and think weed is illegal, but maybe you accidentally end up buying a weed stock or a company that indulges with weed, like Sundial. I know they do like tobacco and weed as well. And I actually did plan on buying Sundial, but since they're into also like tobacco market, I didn't really want to touch that because I personally don't like tobacco products of any kind. So I told myself that I would hold off from that stock because I don't exactly believe, I wouldn't say their core values, but their core structure. I don't want to buy tobacco companies. I think tobacco is kind of useless. So that's also what you want to do. You know, you don't want to buy stocks that either that could affect your daily life, or that makes, or that are big enough to affect your daily life if you don't like the company. I mean, same thing with Apple. Apple, I don't necessarily like their products, but I see that they are very innovative with their products, and they have a lot of capital, and they could seriously influence the whole world. Same with Microsoft, obviously, just a little bit on a lower scale, I would say. They are a good, innovative company, and I like what they sell and what they do, so that's why I have both of them. I'm not just an Apple guy or just a Microsoft or just Samsung guy. Anyways, sorry about that little rant. So I bought some also enterprise products, about 8 shares plus $14 total. They pay a dividend as well. I got about $1.42 off of 3 shares, which isn't that bad. I have SPHD 500, a low volatility ETF. I have an average cost of $38.81. I have a dividend actually pending from 7 shares, so $1 back for 7 shares, or 14 cents per share. That's not too bad. Obviously, you can get more bang for your buck for something like Mort, because they're cheaper and they pay pretty similar dividends. Let's actually check that out, how much per share. They give about 35 cents. So they're about half the price of the SPHD, and they pay about double the dividends. So it's, I mean, some stocks are going to be like that. Obviously, a company like Johnson & Johnson, their price per share is going to be really high, and they have a lot of potential to grow, but their dividends aren't going to be as big. If I'm getting $5 or whatever from Mort, that's almost a half a share. So the compounding interest could really snowball a lot faster, where with Johnson & Johnson, it could take me 100 years before I even get a dividend amount back that is worth 1 share, right? That's just kind of my thought process on it. Johnson & Johnson is a great company. They do great things. They obviously helped make a vaccine for the whole world to be able to survive. But for my money, I don't want it to grow that slow. So moving on, I have some Cisco, about 5 shares with a total return of 528. I haven't owned them for that long, so I don't have any dividends from them. Then I have some BMW. BMW is kind of more just like I like cars. I own a BMW. I really like BMWs. I used to like work in a tire shop and work on my car a little bit. I don't really work on my car anymore because of where I currently live. I don't have like the space or garage or whatever. I'm in an apartment, so obviously I don't have the space to work on it. But I just like BMW in general. I think they're also very innovative with their technology. And I don't know, BMW to me, at least, is just a good company. And they also pay a dividend, not very high, only 1.9, and I haven't had them for that long. But for a total return of $1.02, that's not bad. And then I have some Coca-Cola, about 6 shares. I have a dividend pending of about 84 cents off of 2 shares. So that's also pretty good, a pretty good ratio. 80 cents off of 2 shares. That's not bad. Like I was saying earlier, I'll feel the compounding interest effect way more faster on companies that are smaller, but just as impactful, as like a company like Johnson & Johnson, or any company that's like that pays dividends. I'll feel the compounding interest snowball effect way more faster with a smaller smaller market cap company. So anyways, and then here's my one share, or two shares I should say, so my one stock that I own that actually doesn't pay a dividend. I haven't bought any in a very long time since I first started investing. I bought two shares back in July for $52 each. At the time, I was debating should I buy Intel or AMD, and this was kind of when like new like graphics cards and whatnot, and like CPUs were coming out, and I was like, well, I know AMD's they're looking pretty hot. Intel's, I have a family member who worked at Intel. Intel, they're a good company, but they aren't very innovative, and they aren't pushing the limits of what they could do. While I saw, AMD, they could definitely innovate, and they could also push the limits of what technology and us humans can do. So I thought that was really cool. I debated for a long time before buying AMD if I should have bought Intel, because Intel did buy or pay dividends, but on this one I wanted to see just what could happen on buying a stock that doesn't pay dividends. And obviously not every time, but this time for me, my money grew a lot. I could almost buy a whole new share if the price is still $53, obviously. So I've gotten about 50% of my money back, which is pretty good just on one company. And then I have AMC. The only reason why I have AMC is obviously with the GameStop thing, things blew out of proportion. People went crazy. And people say, buying AMC is going to be shorted too. And, the price of AMC is going to rise. Obviously, I'm not trying to jump on that bandwagon with GameStop, because GameStop is a little bit more risky. But if AMC happens to blow up in price, I just want to see what my money could do for me. If AMC blows up to $100, yeah, I'll miss out on buying AMC when it was cheap, but I just want to see, what happens if AMC does, just to be in the market. If I had bought GameStop, or if I had thought GameStop was good buy before the whole short selling was, obviously I would have made a lot of money, and I'm not trying to make a lot of money on AMC. My friend he's kind of a bigger believer in AMC than I am, but he does say, AMC, even if it doesn't go to the moon at $100, AMC, back in 2017, which was a long time ago, obviously, was about worth like $30 or so. So I could see his point of, even if AMC doesn't go to the moon, it is very, very undervalued. And that's my whole stock portfolio. Oh, and I guess, have some Doge. And I also have some crypto, but that's on Coinbase, not Robinhood. If you want to learn more about my crypto assets, I can make another video completely separate on that. Crypto and stocks, I feel like, are very similar, but they are also very different. So if you want me to talk about my crypto and my knowledge of crypto, which is very little, go ahead and just comment down below and like the video, and let me know that that's what you want me to do, and maybe I'll make a video on it. But for now, thank you guys for watching, and I will see you guys next time.